Recording now. All right, so problem 2-1A. It says, Carla Tanner opens a web consulting business called LinkWorks and completes the following transactions in his first month. So the first thing that we are supposed to do is to journalize these transactions. And I have them up here one by one. Can you guys see this? Now? Now?
I can
But can you see your paper?
No.
This is as good as it's gonna get. Somebody had a question? No? If you can't see, just move up. All right, Tanner invests $80,000 cash along with office equipment valued at $26,000 in the company. So, how do we journalize this? Debit to what? Credit to what?
Debit 80,000 to cash.
So, debit cash
Credit only.
for 80,000. Okay. What else?
Credit owner capital. Tanner capital. Yeah. You got office equipment.
You have office equipment as well.
Office, 26,000.
What do I do with it? That's how I need you to talk to me. Debit office equipment for how much?
26,000.
What do I credit? Capital. Tanner. How much? 106,000 even?
Yes.
Okay, good. Next transaction. The company prepaid $9,000. The company prepaid $9,000 cash for 12 months rent for office space. Hint, debit prepaid rent for $9,000. So it already gave you partial of it, right?
So the first thing is prepaid on.
You tell me. Didn't you just do this?
Yeah. Well, I put cash first.
Why? Did they pay it or they received it?
They paid it.
They paid it. So cash would not go first because that would be a credit. So prepaid rent, $9,000. What else?
And then credit cash.
Credit cash for $9,000. Everybody with me so far? Yes, ma'am.
If they receive it, then if
That's common sense. When you receive cash, that means an increase, right?
I was just saying, which one is labeled first?
Debit.
Tell me.
As far as what goes first.
Debit's always first.
And I said that. I stated that. Debits always go first. Never put a credit first. Ms. Warren's question was, why is cash not debited? And we said cash is not debited because it said that they did what? They prepaid. 9,000 cash, and that's the reason why we don't debit cash, because our cash did not increase. It decreased, right? Because we paid for something. But debits always go first and are always listed in that order. So let's just say, for instance, you had 2 accounts being debited and 1 account being credited. You would not list the debit, then the credit, and then the other debit. You would do what?
Debit.
Both debits, and then the credit. Or if it was two credits, both debits, then both credits. But don't mix them, everybody gets what I'm saying, right? Don't jog in between is what I'm saying.
Or do one credit, one debit, one credit.
Right, if it's multiple debits within that one transaction, you list them all first, and then your credits. Same thing.
As a sub, list them as a indented.
They're already, credits are gonna always be indented, always, okay? That's not what I'm saying. What I'm saying, if this transaction affected more than just prepaid rent for a debit,
Right.
you would not do prepaid rent, then cash and then that debit. You would do that debit, then credit, okay? Next transaction, the company made credit purchases of $8,000 in office equipment and $3,600 in office supplies. Payment is due within 10 days. Now, what part of this transaction is irrelevant to you right now?
How many days?
The payment is due within 10 days, right? That has nothing to do with what you're journalizing as far as this transaction. So, this means that you're gonna do a debit to what and a credit to what?
You're gonna do a debit to office equipment and
Debit
Credit.
to office equipment. How much?
8,000.
8,000. Okay.
A debit to office supplies.
A debit to office supplies for how much?
3,600. And a credit to accounts payable.
Everybody agrees? Credit to accounts payable for how much? 11,600. Everybody clear about this one? Or no? We're good, or is that what you all have? Is that what everybody has? Okay.
No. But I'm gonna have that now
Okay. That's still
though. I
works.
understand how
Okay.
you got it.
So mine is not the number, it's the order.
Okay, next transaction. The company completed services for a client and immediately received $4,000 cash. So what happens here?
Cash, debit, 4,000.
I debit cash for 4,000
And revenue credit.
and credit revenue. Is everybody clear about what we did up here? Sure?
Okay, I just want to ask a question. So I know that they received that cash money, so that's their debit, but where do we get the revenue?
That's what they earned.
That's what
That
made.
money that came in.
It doesn't even have to be that they received cash or whatever for it. The fact that they performed the service, they earned it. So you have to recognize that.
Okay.
Anytime a service is performed or an item is sold, that is revenue
That is
earned.
revenue, okay, all right.
Regardless, remember the revenue recognition principle that I talked about in chapter 1? Where regardless of when cash is earned, revenue is recognized the date that it incurs. Everybody clear? Okay. Next transaction, the company completed $6,000 project for a client who must pay within 30 days. What part of that is irrelevant?
When they must pay and all that.
When they must pay. So we could care less that they must pay in 30 days. Right now, for the purposes of this transaction, we must debit what?
Accounts payable. I mean, no, we're crediting.
Accounts receivable, because that is money that you're planning to receive within 30 days. So a debit to accounts receivable for 6,000 and a credit to what?
Revenue. Yes.
Okay, well, it told us to put service revenue.
It's fine.
Okay.
This is the thing. Don't get hung up by the account names. Because
Okay.
truthfully, all I'm concerned about is that you know revenue when you see it. I don't care if it's service revenue. I don't care if it's product revenue. Sometimes you might see fees earned,
That's
and that's fine too. It's all revenue. I just need you to know that that's where it goes. Okay? For the transaction. Next transaction says the company paid $11,600 cash to settle the accounts payable created on April 3rd.
So we're going to debit
Debit what?
accounts payable. And
You're gonna debit accounts payable
the 11,600.
11,600. Okay.
And then we're going to credit cash.
Credit cash because it is decreasing for 11,600. Go ahead. Ms. Warren, you have a question?
Why, if they paid it out, why wasn't it?
They never paid it. Go back and read the previous transaction. Go back and read transaction 3. Where they purchased equipment and supplies on what?
Credit.
On credit. So they never paid cash for it. They put it on credit. Which means they were gonna pay it 30 days later. And now they're finally paying it. So we're taking it out of accounts payable and we are collecting cash. Taking it out of accounts payable and paying cash for it finally. All right. Next transaction. The company paid $2,400 cash for the premium on a 12-month insurance policy, hint, debit prepaid insurance. Now, what part of this is irrelevant?
The 12 months.
Yeah, because that's not something you really need to know right now for the purpose of this transaction, right? So, what do we debit?
We debit
Prepaid insurance
and credit
for $2,400 and credit cash because it is decreasing because we're paying for something, right? $2,400. Okay, next transaction. Next transaction, the company received $4,000 cash as a partial payment for the work completed on April 9th. So what do we do here? What do we debit and what do we credit?
We debit cash.
Debit cash for what amount?
4,000.
4,400. Credit what?
Account payable? No. Don't we debit account payable?
Accounts what?
Oh, receipt.
Everybody needs to listen. Nobody needs to have a separate conversation. Everybody needs to be paying attention up here. So debit cash for 4,400. Credit what?
24.
Oh, receipt.
What's the account?
Receivable. And we're gonna credit. Yes. Okay.
Next transaction, the company completed work for another client for $2,890. What do we do here?
That's on credit, so we're going to debit accounts receivable,
Debit accounts receivable,
and we're going to credit revenue.
credit revenue. Next transaction. Tanner withdrew $5,500 from company for personal use. What do we do here?
We're gonna,
Credit, what's the debit?
the debit is on a withdrawal.
So debit, K Tanner withdrawal. For 5,500. Credit cash for 5,500. Next transaction, the company purchased $600 of additional office supplies on credit.
We're going to debit office supplies, 600, and credit account payable, 600.
So debit office supplies. $600 and credit what?
Accounts payable.
Accounts payable, 600. Next transaction, the company paid $435 cash for this month's utility bill.
Debit utilities and credit cash,
Debit utilities what?
$435.
No, utilities what?
Utility bill.
Expense.
Oh,
That is very important.
okay.
Always put the expense behind it because otherwise you might get it wrong. Utilities expense for $435. Credit what?
Account cash.
Cash, because they paid cash. $435. And that was all for the journal entries. The second part of this problem asks for us to put it in a general ledger. Now, instead of using a general ledger, I'm going to do T accounts up here, which is the same thing. It just looks different, okay? So I want you to follow along. So what were the accounts that you had for this entire problem? This is how I'm going to label. I know cash was one.
On the capital is one?
Go in the order of liquidity.
Oh,
Accounts receivable,
office equipment,
office supplies,
and prepaid insurance. What about the equipment?
prepaid insurance,
Prepaid rent.
in order of liquidity. Prepaid rent, office equipment would have been last because it's not as liquid as everything else, right?
How is office supplies more liquid than?
Let me explain liquidity again. Liquidity means if I go out of business tomorrow, what can I sell fast to convert to cash?
Right.
Cash is the most convertible. It's already there, right? Accounts receivable would be next because we can collect money from customers who owe us quicker than we can sell assets.
Right.
Supplies, that's something that's very tangible and is used every single day. We can get rid of that quicker than we can office equipment.
Right.
We can get our money back for prepaid insurance quicker. Prepaid rent, quicker. Office equipment may take you a little longer to sell. Everybody understands, right?
Oh,
You sure? Kind of, sort of. It just means if you liquidate tomorrow, because that's where that word comes from. If you go bankrupt tomorrow, what do you think a customer is gonna buy from you first?
So where would land fall?
Land probably wouldn't fall anywhere as far as most liquid. It'll probably be at the very end. Things like land, building, those types of assets that are big, heavy items that hold value, those are gonna be the last on the list under assets because they're not very liquid. And it might take you years to sell them. Does that make sense to everybody now? Okay, so now what we have to do, if you remember the whole left side, right side?
Right.
DR for debit, CR for credit. Everybody remembers that? So all we're doing here is we are transferring information to these ledgers. That's all we're doing. Now, we talked about normal size of accounts last time we were here, right? So this is where that comes in. You place things where they fell on the journal entry, okay? And the balance will fall on the whatever the normal side is. So if you're looking at your journal entries, because that's probably what you need to look at in conjunction with writing this. For the cash account, April 1st, what happened?
April 1st, we have a debit of 80,000.
So a debit for 80,000. And then April 2nd, what do we have?
A credit.
A credit of cash for 9,000. Because see, all we're only concerned about for right now is what? Cash. We haven't moved to the next ledger account yet. 4/6. What happened?
4/6.
Debit 4,000.
4,000.
What's next?
April 13th.
4/13.
A credit of 11,600.
Credit of 11,600. Next, April 19th.
A credit of 2,400.
2,400. April 22nd.
A debit of 4,400.
April 28th.
Credit of 5,500.
And then lastly, April 30th.
A credit of 435.
So what happens? We've listed everything that happened with the cash account just there, right? Everybody saw that. So how do you, first of all, what side does the balance go on for this cash account?
Left side.
Left side or debit side. So the easiest way to do this, you can do it a couple of ways. You could either add all these and subtract this side from here. Or you can go in the order that it went. So 80,000 plus 9,000. 80,000 minus 9,000 plus 4 minus plus minus. Tell me what the balance is, because everybody in here should have a calculator. And if you don't, I know you have a phone, right? Pull that out.
$59,465.
Okay. 59,000. 59,465. Is that what everybody got?
I got 59 and I got the 10.
You got
It is 59,465.
65.
I did it wrong.
59,465. Okay, next account we have up there is accounts receivable. Look back at your journal entries. May 9th, what happened?
And it's a debit of 6,000.
A debit of 6,000. April 22nd, what happened?
A credit of 4,400.
A credit for 400. April 25th,
Debit of 2,890.
2,890. So now we're ready to balance this. And what side does it go on for accounts receivable?
Debit.
Debit. So add that up, subtract what you need to, and tell me what the balance is.
$4,490.
4,490. Good. Moving on. Office supplies. April 3rd. What happened?
A debit of
Debit for 3,600. April 29th.
600. A debit of 600.
A debit of 600. So that means our balance for office supplies goes on what side?
Debit.
Debit. And what does it come out to? 4,200. Good. Moving on. Prepaid insurance down here. April 19th, what happened?
Debit 2,400.
Debit for 2,400. What side does the balance go on?
I say debit side.
Debit. And we can just bring it down because that's the only thing that happened, right? 2,400 is the balance for that. Prepaid rent. April 2nd.
9,000. Debit 9,000.
No other transactions.
Mm-mm.
What side does this go on?
Asset 9. Debit.
Debit. And the balance is simply brought down. 9,000. Office equipment. April 1st.
Debit 26,000.
26,000.
April 3rd.
Debit 8,000.
What side does this balance go on?
Debit.
Debit, because it's an asset. And what's the balance? 34,000. I'm gonna give you time to hurry up and fill that in on yours before we move on to the other account.
How many more accounts we got to move on to?
So you got liabilities, so accounts payable, and then you have capital, you have withdrawal. You have revenue and one expense, so about 5 or 6 accounts.
And this is called a T account.
Yes. Ready to move on? Yeah? Okay. So the other accounts we have are your liability accounts, which is accounts payable.
Do they have a specific order they could be listed in?
Well, it's only one in this case, but yes, those are still also listed in order of liquidity. So for instance, with liability accounts, you may have accounts payable, you may have notes payable, you may have mortgage payable. You would list them in order of liquidity. Which one can we reasonably pay off right away if we shut down tomorrow? Accounts payable will be the most liquid, so it's always listed first. Notes payable, that's something where somebody has, a note, so it could be a loan or something like that. That's gonna extend past 12 months, so it's considered long-term. That will be after. Mortgage payable will be after, those types of things. So we had accounts payable and
That should be it, right? Because
capital.
owner equity. Or owner, is it owner equity or owner capital?
It could be owner capital.
Okay.
You have withdrawals. Is everybody still up here? Withdrawals and service revenue or revenue. And utilities expense. All right, so for accounts payable, April 3rd, what happened?
The third, accounts payable credited, 11,600.
April 13th,
It debited 11,600.
April 29th,
It credited 600
what side does this balance go on?
on the credit side.
Credit side, what's the amount? For the balance?
600.
600. Moving on, capital, April 1st, what happened?
106,000 on the credit side.
So credit 106,000. The balance will go on what side?
The
Credit. And we have a balance, just bring that down 106,000.
you made an owner withdrawal.
We haven't gotten to it yet. They have a totally separate account. This is capital, these are withdrawals. You don't combine them. It's all under the umbrella of equity, but you do not combine them. They're two separate things. Okay, so withdrawals would be deduction, capital would be things that are invested into the business, right? So withdrawals, April 28th. What happened?
5,500 is correct.
For withdrawals?
5,500.
Debit or credit? Debit. 5,500. That's what we did in our journal entry. Didn't we?
Yeah.
Oh. Okay.
So what side does the balance go on for withdrawal? Debit. And we just bring our balance down. Service revenue, April 6th.
The sixth, it's credited 4,000.
April 9th.
6,000 credited.
April 25th.
2890 credited
What side does this balance go on?
on the credit side.
Credit side, so what is the balance? Which means you probably just add all these up. 12,890. And then utilities expense, April 30th. What did we do?
435 debited.
And what side does this balance go on? So we just bring down the 435. We give you a chance to fill that in.
That's it. The end of the right. Bill.
That's what drawing expense, what is that every time? Legal expense.
Yeah, you see how I'm looking at y'all, right? 'Cause I don't even know what y'all saying. It's just a bunch of mumble. What's where?
Oh, it was on the right at the bottom. It said
Utilities expense. These are the same accounts you use for what?
Your journal.
The journal entry. We're just putting them in general ledger form.
Quick question, so capital withdrawals and service revenues and utility expenses payable. And, liability is, accounts payable, note payable, and mortgage payable is fine.
Yeah, we didn't use those other two accounts, but yeah, those considered liability. So the problem now is asking for us to do that trial balance, that sheet that you guys got. Pull that out, and you can write this directly on there. Who was not, I know you need this other piece of paper that I gave them, that I tell them to keep with them. Yeah, pull that out.
I mean, well, you.
Okay, so we're doing a trial balance, and where do you think these amounts come from that need to go on this trial balance? The T account that we just did.
And then another one?
Another what? This, that's all I have left, I believe.
You got
So
some,
whoever
right?
else can
She
get
needs
on.
one right here. Oh, you go.
So the trial balance is a list of all these accounts in order in liquidity, in order of liquidity. And we're just gonna do the same thing, put whatever, wherever the balance is supposed to lie, that's where we put it. The goal at the bottom of it is to do what? For both sides. Balance for both sides. So, starting with cash. What was the balance of the cash account?
8,000.
59,465. Is everybody with me up here?
Yes.
Because I hear several other conversations. And the only way you're going to get it is if you focus on me.
You're putting the amounts in from the ledger, correct?
Correct.
Those totals from the ledger?
Correct.
Okay.
Which is like the two. Same thing.
Cash, what's the balance of cash?
59,400.
Where do we place it? Debit or credit side?
Debit.
Next account is accounts receivable. What's the balance?
4490.
4,490. Where is it placed?
Debit.
4,490. Next account is office supplies. What's the balance? 2,400 for office supplies.
4,200.
4,200. And where do we place it?
Credit. I mean debit.
Debit.
Debit, 4,200. Prepaid insurance,
2,400 on the debit.
2,400 is the balance, and we should place that on the debit side. Prepaid rent,
9,000 on the debit side.
$9,000 on the debit side. Office equipment,
34,000 on the debit.
34,000 debit. Accounts payable, What's the balance?
Six
600, and where do we place it?
credit side.
Credit. Capital. What's the balance?
106,000
106,000, and where do we place it?
on the credit side.
Withdrawals. What's the balance?
5,500 on the debit side.
5,500, and we place it on the debit side. Services revenue.
12,890 and it's on the credit side.
12,890 placed on the credit side. Utilities expense.
435
$435,
on the debit side.
and we debit it. Now this is where you can test and make sure that you did everything correctly, because now you need to add everything that is on this side and everything that is on this side.
Okay, so 119,490.
Read it to me in accounts terms.
119,490.
Thanks. Everybody got that?
Yeah.
119,490. Now I know that it's like, oh, we do it in class, it's so easy. We go home,